Okay, good afternoon. Thank you so much for joining us. My name is Jamie Schenker-Passero. I am an Associate Director for the Temple Small Business Development Center. We help businesses start and grow. We are offering all of our services virtually these days. That includes virtual consulting with our team of consultants, as well as virtual trainings like this one. I will include a link in the chat box to our resource page that we update daily. That includes updates on disaster relief programs. It also includes links to our past webinar recordings and a calendar of our upcoming events. We have quite a busy calendar for July and August, which is exciting. So there are a lot of great events on there that you can check out, and I'll post that link. We do have everybody muted. If you have questions, you can post them in the chat or in the Q&A, and I will direct them to our presenters today. They are coming to us from the Pennsylvania Department of Revenue. We are very excited about this webinar. I know we got a great response, people really interested in this topic, so we're appreciative of their time today. This webinar is designed for newer businesses, so ideally businesses who have been in operation under a year. So I will introduce today's speakers from the Department of Revenue, which are William Hartman and Alicia Gons, and I think William is going to start us off today.
Good afternoon, everyone. It's a pleasure to be here with you today. As Jamie said, my name is Will Hartman. I have worked with the Pennsylvania Department for over 30 years in different capacities. I spent many years in the Bureau of Audits in helping with their audit program. And I also spent many years in the enforcement planning area where we worked on a lot of different voluntary tax compliance projects. And now I am currently working in the Customer Experience Center where I serve as a special assistant to the director with a primary focus on outreach and education. My colleague Alicia Gons is the division chief in our customer outreach and engagement area, and she will be speaking with you in a few minutes. Okay. In front of you is our agenda for today. And before I get into the specific bullet points there, I want to make sure I give you a sense of how this agenda was developed. For several years, we've been working on outreach and education initiatives aimed at new businesses. And one of the things we wanted to do is make sure that the materials we developed for new businesses was directly on point with their needs. And so we reviewed our data analytics, we reviewed our business intelligence, we talked to bureau directors from our collections and taxpayer services area, audits, the Board of Appeals, from our customer service center, all of that to gain an understanding of where we saw new businesses making mistakes with their taxes. And from that information and from that research, we developed this agenda. We'll lead off with income taxes. Everybody's affected by income taxes, but how you file is dependent on what kind of entity you are, whether you're a sole proprietor, a partnership, or S corporation and LLC, or a standard C corporation. We will talk about trust fund taxes. This is so crucial. This is a big area where we find a lot of new businesses making mistakes because they don't understand the legal side of what trust fund taxes are and the complications it can create if it's not properly managed. We also want to talk about business use tax. You know, 90 to 95% of businesses in Pennsylvania have a business use tax liability, and at least up until recently, most businesses, especially small businesses, were not even aware of what business use tax is. So that is on our agenda today. We also want to talk about exemption certificates. If you buy things for resale, you want to know the proper use of this form. If you are selling to other retailers, you want to know about the proper use of this form. And finally, we're going to talk about some tips for success, some guideposts to help you along your way in organizing this information and then building a plan for yourself to execute these different elements. And then finally, when we leave, we want to discuss your rights as a taxpayer. There has been documents printed up on what these rights are, but we want to highlight a few of them today. So that's our agenda for today. Let's talk about income taxes. If you're a sole proprietor, you're going to report your business income on your PA-40 with the support of Schedule C. Most businesses use a Schedule C, but if you're a bed and breakfast operation, or if you are renting a room out in your home, you'll use Schedule E, and if you're a farmer, you will use Schedule F. These are the forms that you use to report your income taxes, following the standard income tax filing schedule, which is generally April 15th. That's the due date most years. This year got extended, of course, because of COVID, but in most years, the due date for that is April 15th, and the tax form is a PA-40 supported by the appropriate business schedule. If you're a limited liability company, if you're a single member limited liability company, you will still file a Schedule C or an F. And if you have rental property, it's the same thing if you're a single member LLC. Now, if you're treated as a partnership, okay, if you're an LLC that's treated as a partnership, you can come down here to the next block where you see your filing requirements are centered around the PA-20S/PA-65 information returns. These returns summarize the business and expenses of your operation, but they're also act as a cover sheet for the K-1s that you file with the department. A K-1 is a form you use to report the individual breakout, the passing through, as it were, of income and expenses to the individual partners. And then, of course, those forms are also passed to the individual partners so that they can use it to fill out their own individual income tax return. That's a high-end overview. We have a lot more information on our webpage, which we would encourage you to explore. But it gives you a brief idea of where you should be operating in terms of income tax filing, depending on what your entity is, what your entity type is. Okay, we next want to talk about trust fund taxes. Trust fund taxes is money that you collect that is held in trust on behalf of the Commonwealth of Pennsylvania until it is paid to the Commonwealth of Pennsylvania. The thing to remember about trust fund taxes is they are not the property of the business. They are the property of the Commonwealth. So they must be reported timely and remitted in full to the Commonwealth based on the established filing schedules for the appropriate tax. And something that's very important to remember is that funds are not to be used for business or personal expenses. There are legal consequences that attach when these funds are used for personal or business expenses. And we will make you aware of what they are later today, but this is, again, just a high-end overview of what a trust fund tax is. Now, in Pennsylvania, there are 5 trust fund taxes. There is employer withholding tax. This is a tax that you withhold from your employee at the rate of 3.07% from their paycheck. There is sales, use, and hotel occupancy tax. This is a 6% tax you pay at the time of purchasing taxable, tangible personal property or taxable services. There are public transportation assistance fund taxes and fees. I know within our crowd today, we have some auto shops or auto mechanics. Within this item here, number 3, public transportation, there are tire fees that apply to the sale of new tires. Vehicle rental tax is intended for those businesses that have 5 or more vehicles that they hold out for rent. And then there are liquid fuels tax for those businesses that sell fuels. The dispenser of the fuel is responsible for collecting and remitting the tax. We're going to spend most of our time today on the top 2, employer withholding and sales and use tax, because those are the 2 most common taxes that you're likely to run into. So let's talk about employer withholding tax. As I previously stated, employer withholding tax is the tax you withhold from your employee's paycheck in every pay period. You withhold at the rate of 3.07% on all Pennsylvania taxable income. And again, it is withheld at the time you pay the wages. It is due, the tax due date is determined by the amount of tax you pay, and we have that scheduled out on our webpage. If you look to the right, you'll see there the reference to the Rev 415 Employer Withholding Information Guide. That's another place where those schedules can be found. The tax is paid through our eTide system, which we will cover a little bit later, but basically it's an electronic filing system that functions over the internet. You may also pay by telefile, so you actually have two options. One thing you should remember with any kind of electronic filing, payments of $1,000 or more must always be paid electronically. If they're not paid with electronically, you will incur penalties for not filing on our established systems. Now let's talk about sales tax. Again, sales tax is a 6% tax on items that the law has deemed to be taxable. Generally, it's tangible personal property, but there are also certain enumerated services that are subject to the tax. You pay at the time of purchase. If you're selling, you collect at the time of sale. Sales tax is due when you're a new business in Pennsylvania. You will initially be set up as a quarterly filer. So that means the filing due dates are April 20th, July 20th, October 20th, and January 20th. In November of every year, the department reviews sales tax accounts to see how much tax was remitted. If the sales tax remittance amount reaches a certain level, you could be changed from a quarterly filer to a monthly filer, and you would be notified by mail by the department if that change was made. You file and pay the same way you do with employer withholding. You would use our eTide system or our telefile system. We believe the eTide system is actually easier and more efficient. But again, you have to sign up and you have to create an account for yourself. And again, payments of $1,000 or more must be remitted electronically. On the right here, you see a reference to the Rev 717, the Retailer's Information Guide. This is a wonderful resource. There are so many twists and turns in sales tax, and this guide will help you get your arms around the kind of things that are taxed and the kind of things that aren't taxed. But it is a guide because it's not possible for the department to individually list every single possible transaction there might be. That would be just a never-ending document. So again, this guide gives some basic lists of what's taxable and what's not taxable, and it's sorted by industry, product type. It's available on our webpage, just like the employer withholding guide is, and both documents are PDF files and can be searched. You can do word searches on them to help ease your experience of going through and finding the information that you need. Okay, we're going to take a few minutes here now to talk about use tax. This is one that many new businesses are not aware of, and so we want to bring this to your attention today. Use tax is money that is due, is tax that is due, that you remit yourself. So the full name of sales tax is actually Sales, Use, and Hotel Occupancy Tax. So when you go to a store, if you go to a box store and you buy office supplies, you get rung up at the cash register and you are charged sales tax, which you pay at the time of sale. But sometimes you'll buy goods or services that for whatever reason, the vendor does not charge you tax at the time of the purchase. Well, you still owe the tax and you'll pay it on your first use. Thus you have sales and use tax. Every state that has a sales tax has a use tax, which we'll discuss in a moment, because use tax protects the brick and mortar stores that are in Pennsylvania from outside stores who get to sell without charging the tax. Now, use tax is paid any number of ways. If you're registered for sales tax, you can pay any use tax that you have on your sales tax return. When you go into eTides and you bring up the sales tax return to fill out, report your monthly activity and calculate the amount that you owe for the month, there's a line also on there for you to put in your use tax. So if you're registered for sales tax, use tax gets paid the same time sales tax does. If you're not registered for sales tax, but you have ongoing use tax liabilities, then we recommend, of course, that you register for a use tax account. And then again, you can file that on a monthly basis. If you have, if you're not registered for sales tax and you only have intermittent use tax liabilities, you can do one-time payments through our eTide system without necessarily having a business use tax account. Now, use tax applies not just to businesses, but it also applies to individuals. And I point that out to you today because the PA-40 can be used by individuals to pay their own individual use tax. And they can also use it if they're a sole proprietor, home office expenses. The information on the payment of use tax in those scenarios are described in the PA-40 instruction booklet. Use tax is due generally the month following the month of use in Pennsylvania. So how does that work? So I like to tell this story because I think it's a great illustration of how use tax works. Several years ago, my daughter decided that she liked Shirley Temple movies. And for Christmas, she asked for Shirley Temple DVDs. So I went shopping all throughout the Harrisburg area and I could find no Shirley Temple DVDs. So I went online and I shopped and I found a California warehouse that sold all kinds of things like that. But the California warehouse, because they did not have a physical presence in Pennsylvania at the time, they weren't required to charge me sales tax. So I bought these DVDs, and when I got them, I now owed use tax. I owed 6% use tax. So with the use tax then, I was responsible, if the DVDs were like $60, so I was responsible for paying $3.60. And it was due the month following the month I purchased it. So I purchased it in December, which means that I owed the use tax in January. Now, if you're paying use tax as part of your sales tax return, well, it's due whenever the sales tax return is due. And then if you're a monthly filer for just a straight up use tax account, it's going to be due the 20th of the month following the month of your delivery into Pennsylvania. One other point I want to make about both sales and use tax. The state rate is 6%. So 6% for sales tax, 6% for use tax, but there is an exception. If I make a purchase in Philadelphia County, I have to pay an additional 2% local tax. Or if I make a purchase in Allegheny County, then I have to pay an additional 1% local tax. So you do need to be aware that for those jurisdictions, the tax rate is higher and includes a local tax component. And the most common exposure to use tax occurs generally when you're making sales over the internet, the way I explained. But there is one other way you might find yourself exposed to the tax. So everyone knows that Delaware is a tax-free state. Well, it's not really tax-free. I mean, you can go to Delaware and you can buy all the furniture and all the stereo equipment and all the things you want. But the minute you bring them back to Pennsylvania, they're not tax-free. You owe use tax on the items you bring into the state. So just keep in mind when you see advertisements from another state that says you can shop in our state tax-free, it's not really true if you're bringing the items back to Pennsylvania, because use tax then kicks in. And that would be the same for things you buy through a catalog or over the telephone where the vendor doesn't charge the tax, and you would pay use tax in those situations as well. So what's the importance of use tax? Well, the importance of use tax is it levels the playing field for Pennsylvania businesses. Again, if Pennsylvania vendors are in competition with out-of-state vendors selling similar goods and services, the Pennsylvania vendor is operating potentially at a 6% disadvantage because the out-of-state vendor may not have to charge the tax. And so that's why there's a use tax. And without that use tax compliance, literally, Pennsylvania businesses are operating at a disadvantage against their out-of-state competitors who don't charge the tax. Every state that has a sales tax has a use tax for the same purpose. So let's give an example. So I decide I want to open up a music shop. I don't know if we have any musicians in our crowd today or anyone who's repairing musical instruments or selling books or whatever, but let's go. Let's be a music shop. And so as part of that music shop, I want to set up my office. And I go shopping for office furniture, and I find a place in Baltimore that can sell me exactly what I want for the price of $10,100. And look at the tax line. No taxes. Now, if I don't know anything else and I'm not familiar with use tax, I might think, wow, that's the place to go. I can buy all of this stuff without paying any tax. But I'm still shopping around, so I check out a Pennsylvania vendor, and I'm looking for the same things. They're priced almost exactly the same. But look at the Pennsylvania vendor. The freight's less, but the Pennsylvania vendor is charging me $600 in tax. Now, if I'm not familiar with use tax, I might look at these two invoices and say, the better deal's in Baltimore. The Pennsylvania business is giving me a price of $10,600, and the vendor in Baltimore is giving me one with $10,100. I'm in business to make money, so I'm going to go where I save money. But the truth of it is, that's the wrong decision, because when that equipment gets shipped into Pennsylvania, use tax is now due. And in this case, use tax of $606 should be added to the invoice. And now, look what happens to the price. When I compare the invoice from the Maryland vendor, it's now $10,706 compared to the one for Pennsylvania. And now you see the Pennsylvania brick and mortar store is back in competition with the out-of-state vendor. That's how tax works. Now, something you should be aware of. You may have some folks say, well, you know what? I'll still buy from out of state and I won't pay the tax and no one will ever know. That's not good tax advice in this day and age with all the electronic records and the amount of data that gets exchanged between different government entities. If upon audit we find an invoice like that, not only will we assess the $606, we will also add penalty and interest. Penalty alone can be up to 30% of the tax due. So right off the top, you've just added an additional $180 here. And that's even before you add the interest. And of course, if there are several invoices like that, well, then you're looking at a rather large tax bill. So this is an example.
William,
yes.
This is a great point and really, really important. I wonder if we could just have the attendees just by you can use the raise hand function if you consider the out-of-state taxes when making your business decisions. I would love to know how many businesses are aware of it, factored in when they're comparison pricing. You could just raise your hands up. There's a feature for that. I would love to know if this is something that you're familiar with, because this is just so important. So I appreciate that. And I also, if now is okay, I did have a question that was related, or do you want to wait?
We'd like to wait to the end for that.
Perfect, no problem.
What was the response with the raised hands?
I'm seeing two people raise their hands. So for the majority of the people, the majority of the businesses, that this might not be something that they're considering. And I think that this is just, when you think about your expenses, this seems like maybe a hidden one that's so important. So we have three hand raised. Thank you for that. So that's good to know.
So this is what I would add to that. When I do face-to-face, I ask the same question you just did. And generally, most people in the crowd are not aware of this. So I'm glad you pointed that out, Jamie, because this is one of the areas we find when we go in and visit taxpayers where they end up having tax liability because they weren't aware of the tax.
Right. Yeah.
Appreciate that. Thank you. So let's move on. We're now going to talk about Pennsylvania exemption certificates. Okay, so this is really important. I want to tell you why this is important. Proper use of the Pennsylvania exemption certificate will either do one of two things. It will either save you money because it allows you to buy taxable goods and services exempt from the tax, or it allows you to document your compliance with Pennsylvania state tax law. And that's important because in the event you're ever requested to provide your books and records, where we see you didn't charge taxable sales and there's no exemption certificate, you're liable for that unpaid sales tax. So I want you to really pay close attention here because you benefit from proper execution of this form. All right. This is the Pennsylvania exemption certificate, the Rev 1220. And it's broken up into several sections. But if I am operating a retail, okay. So I was setting up a music shop. So let's say I buy a bunch of Martin guitars from wherever they're made in one of those Western states out there. Let's say I buy 100 of them to sell in my shop. Okay. I give an exemption certificate to the store to show them that I'm purchasing it for resale and I don't have to pay tax on that purchase. And the vendor, in the event he's ever audited, can show that he didn't charge tax because he has a valid exemption certificate for that purchase. Now, something I want to point out to you here is there is no such thing as a generic business exemption from sales tax. I've talked to many taxpayers over the years who have ended up owing money, and when you talk to them, they will say, but I have a business. I don't have to pay sales tax on the things that I buy because I have a business. That's not true. While there are sales tax exemptions available for businesses, they're very specific in nature. And if you look at the back of the form, you can see the back of the form on our webpage, but it will list out all the different exemption claims that you can make. But just keep that in mind, that you can't just claim a generic business exemption. There is no such thing. Now, if you look in the middle of the form there where you see where it's highlighted, you'll see 7 little boxes, okay? Those are the 7 types of exemptions that you can claim. So I don't know if you can, how well you can see this on your screen, but if you look at number 3, box number 3, that's where you would claim the resale exemption. If you're selling at retail and you're buying a lot of things from wholesalers for resale, you're going to fill out this form, put in your sales tax number, and give this certificate to the vendor for who you are buying from. The form must be signed and dated in order to be valid because that's who shows the vendor who's actually making the exemption claim. And the form must be in the possession of the seller within 60 days of the sale. And these are forms that when the department does audits, and that's not a word that should scare you, compliance audits are a normal part of the business atmosphere you operate in. And having exemption certificates on file is an expectation that we have of any business that we visit who makes otherwise taxable sales. Okay, with that, I'm going to turn the time over to Alicia to help you develop some framework to use this information to be successful on the tax side of your business. Alicia?
Thank you, Will. Can you all see my screen okay?
Yeah, we see the PowerPoint.
Okay. Good afternoon, everyone. As mentioned in the beginning, my name is Alicia Gauntz. I am the Division Chief for the Customer Outreach Relations and Engagement Division of the Customer Experience Center. I have worked for Department of Revenue for 10 years, starting with collections and moving into customer service. Today I'm going to talk about some tips for success, resources that the department offers, and rights of both taxpayers and the department. The first tip for success is to maintain adequate business records. A question that all new businesses have is, how long do I need to keep my business or tax records? There is no clear answer to that question since each business is different, but we can give you some general advice. Most of the time, the answer is going to be 4 years, which means the current year plus the previous 3 years. For payroll, you will want to keep complete payroll records showing the proper withholding and remittance of Pennsylvania personal income tax and wage expenses. For mortgage, capital asset, and investment records, you will need to maintain those documents throughout the life of the obligation, as they will be used for depreciation and cost recovery calculations. For purchases made during a tax year, you will want to keep records that will help you to document current assets, inventory, and claimed expenses against income. Again, these need to be kept for 4 years. You will also need to keep record of any sales tax paid by you at the time of purchase or any use tax paid by you as needed. If you operate in multiple states, you will need to keep detailed records of Pennsylvania sales, as well as detailed records for every other state where you do business. Like Will said, you will want to keep a file of all exemption certificates. We recommend that you write the transaction number at the top to make it easy to find in the case of an audit. And while we can't recommend any specific products to use for record management, we do want to let you know that there are various software products available that will help you to keep your books and records in proper order. And lastly, if you have a smartphone, we also recommend that you download a free scanner app that will allow you to use your camera to save PDF copies of receipts when you're traveling. All right, so our next tip for success is to keep your address up to date. We're going to talk about address updates, and we know you're all going to think, gosh, who cares about that? This may seem minor, but it is often overlooked. Many taxpayers get behind on their tax obligations simply because they're not receiving correspondence from the department. Usually this is because the items were sent to an old or wrong address. Will provided a good example of this when he was talking about sales tax filing frequency notices. So he mentioned that every November, the Department of Revenue reviews the amount of sales that an entity has. They may determine that you need to be a monthly filer rather than a quarterly filer because you've had an increase in sales. In this case, if your address is not up to date, you may not have known that you're now a monthly filer. And if you file by the quarterly due date, you're now delinquent. Delays in correspondence about overdue tax liabilities extends the time it takes to resolve them and causes additional charges like interest, penalty, and possibly collection agency fees to accrue. You can easily update your address or other information online through eTides. So if you are already registered for eTides, there's an option in the left navigation bar that says Enterprise Maintenance. You'll follow the prompts until it gives you the option to view or update your enterprise information. If for some reason that does not work, we do have the paper form, the REV 1705R as in revenue, which is our tax account information change or correction form that you can complete and send in to us. As always, you'll hear us say many times today, we encourage you to use electronic options to prevent delays in processing. So making sure that you have your correct address actually reduces your business costs and saves time in dealing with potential issues. Remember that the cost of non-compliance far outweighs the cost of compliance. And our next tip for success is to file and pay on time. So for income taxes, this is generally a once-a-year event for you or your business. But I can't tell you the number of times I've heard someone say, I forgot they were due. Failure to file and pay income taxes or estimated tax payments due can result in penalty and interest. For trust fund taxes, like Will mentioned, due dates vary depending upon the amount that you're regularly collecting. Be sure to educate yourself on your business's filing and payment frequencies. He also mentioned that there is information on our website pertaining to both employer withholding and sales tax. Again, the department applies penalties for late filing as well as late payment. So be sure that you're properly submitting everything. The next tip that we have is to maintain separate bank accounts for trust fund taxes. We recommend that you keep a separate bank account to hold trust fund money and to pay the tax due. If you don't keep them separate, you could end up spending the trust fund money and not realizing that you're doing it. So in general, it increases the chance of misusing the tax money. Will mentioned earlier that you cannot use trust fund money for business or personal expenses. It is important to know that using trust fund money for anything can be considered a criminal offense. Next, the Department of Revenue urges you to take advantage of our electronic services. This is by far the fastest and most effective way to get things done. So the department does have instructions available for each of these services on our online customer service center, which I'm going to walk you through shortly. But some of the things that you can do on eTides is schedule due date reminders so that you receive a notification when filings or payments are due. You can view, save, or print notices through our e-correspondence feature. You can request an electronic statement of account, which allows you to see how your payments are applied and what credits that you have sitting on your account. And you can make an electronic payment. So Will mentioned that any payment over $1,000 must be made electronically. If you do not make it electronically, you will get hit with what's called an electronic funds transfer or EFT penalty, which gets applied to your account. So you can avoid the penalty by paying electronically or even scheduling automatic payments. And this list represents just a few things you can do. There's a lot more that you can do on eTides, so we do strongly recommend that you check it out. And our final tip is to safeguard your data. As a business owner, it is important to protect your data and confidential information at all times. So here are some tips to help ensure your systems are secure. Install anti-malware or antivirus security software on all of your devices, laptops, desktops, routers, tablets, and phones, and automatically update the software. Use strong passwords of 8 or more characters. Use different passwords for each account. Password protect wireless devices and consider a password manager program. Encrypt all sensitive files or emails. Backup sensitive data to a safe and secure external source not connected full-time to a network. Make a final review of return information, especially direct deposit information prior to e-filing. Wipe clean or destroy old computer hard drives and printers that contain sensitive data. Limit access to taxpayer and employee data. And you can even check the IRS e-services account weekly for the number of returns filed with a particular FEIN. If you or someone affiliated with your business feels like they're a victim of fraud, please contact our fraud detection and analysis unit. There should have been some PDFs provided to you. One of the attachments contains checklists for both identity theft victims and data breach victims. So these checklists will help you to make sure that you follow the appropriate procedures if you're ever in these difficult situations. Now we're going to talk about some resources. A lot of people ask, where can I get useful information on Pennsylvania taxes that affect my business? Well, if you're not into reading the tax law, I recommend that you go to the department's website, which is www.revenue.pa.gov. And I am going to try to actually walk you through the website and explain some of this. So currently, a lot of the information you need is either along the top toolbar or down the icon belt in the middle of the screen. From the top toolbar, you can easily navigate online services, forms and publications, get assistance, or obtain other general tax information. Over here, you'll see our policies and bulletins, news and statistics, incentives and credits. The middle icon belt provides access to our most popular services. So you'll see make a payment, where's my income tax refund, property tax rent rebate status. Right here's eTides. You'll go in and file your business taxes. My Path, you guys are going to hear a lot more about this in the future. It will be our new portal that we'll be using. And then there's PA Direct File, Customer Service, and Schedule a Call. Our website is compatible with all devices. So this, for example, is the mobile view, meaning you can access it anytime, anywhere from your smartphone. We want to stress that businesses and tax professionals can do so much right from our website. So in addition to what I already mentioned, again, you can obtain forms, schedules, and instructions, log in and utilize eTides to file a return. You can register for new taxes using our online PA 100. So we're assuming that most of you have already registered for your tax accounts, but if not, this is where you would go. You can file an appeal. You can check your refund or rebate status, provide feedback. So if you need to tell us what we're doing wrong or what you really like, please provide feedback. We do review it all the time. You can read our tax blog, PA Tax Talk, and you can get answers to our frequently asked questions. So this will save you time and prevent you from needing to wait on hold for a representative. So once again, just remember, this is only highlighting a few things. There's even more you can do. We have all kinds of materials on our website that can answer your tax questions. So if you have a specific question that you need answered, we recommend that you visit our online customer service center. So once again, I'll go back and bring that up for you. So currently, you'll have to click the arrow on the top carousel and it'll say Customer Service Center and you can click Visit right here. Another way to go in is to click the icon that says Customer Service. And this is a tool where you can access thousands of commonly asked questions. So all you would do is type in your question here and it will bring up, let's see, what is the text? It'll bring up any FAQs that are related to your question that you typed in. So if your question still was not answered, you can submit a question to the department, which is almost like emailing a representative. You will have to create an account. I'm already logged in. So when you create an account, you'll then select your category. There's over 30 categories here that you can select. And if you don't know, we even have a I don't know option. You put your subject, your question, and then you will get a response within 72 hours. So you'll get an email that looks a little something like this, and it gives you a number that we can locate your question if by chance you would have any issues with that. If you would like to actually talk to a representative on the phone, you can contact the department's Customer Experience Center, which is available Monday through Friday from 7:30 to 5. Now keep in mind, COVID-19 has changed this up a bit, so currently our phone lines are down, but we do have a feature on our website titled Schedule a Call. So Schedule a Call allows you to select the date and time that works best for you, and a representative from our Customer Experience Center will call you back during the time frame. Again, let me pull this up for you real quick so you can see just how simple it is. When you're on our homepage, go all the way to the little phone icon that says Schedule a Call. Once here, it'll kind of highlight what Schedule a Call is. Click the Schedule a Call button, and then this pops up. You put your name, your phone number, the tax type that you're calling about, and you'll select your date and time. And it'll give you time slots because we can only accept a certain number of calls. Just be aware, we'll try to call you as close to the time as you selected. It might be a few minutes depending on volume, but we'll get back to you as soon as we can. And should you need face-to-face customer service, you can visit the district office closest to you. So take notice, there's 2 district offices in Philadelphia for all of you attending today. If you're located anywhere else around the state, those are the other offices that we have available. There is specific information about each office on our website under the Contact Us link. So currently, many of our offices are still closed due to COVID-19, but we are slowly reopening them. We are accepting customers by appointment only. This is so that we can comply with the Department of Health social distancing guidelines. So for the moment, if you intend to visit a district office, we recommend that you call ahead first. All right, now let's talk about your rights as a taxpayer. We've recently revamped our Taxpayer Bill of Rights. So Pennsylvania has a Taxpayer Bill of Rights that ensures equity and fairness in tax administration and enforcement. The Taxpayer Bill of Rights sets for uniform procedures so that the Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees. The right to quality service. Taxpayers have the right to receive prompt, courteous, and professional assistance in their dealings with the Pennsylvania Department of Revenue. If you ever feel like you do not receive this type of assistance, please share your experience by visiting our website and completing our customer service feedback survey. You can tell us how we can improve and what we're doing well, like I mentioned earlier. We do take the customer feedback very seriously. We do review the feedback regularly for continuous improvement. You have the right to be informed. So taxpayers have the right to be informed and receive clear and easily understandable communication from the department. We are currently working on a plain language initiative for all notices and content available on our website in order to better inform the public and increase taxpayer compliance. We'll talk in a few slides about the audit process and how it ties into this. You have the right to confidentiality. So taxpayers have the right to have their tax returns and other information kept secure and confidential. The department will not disclose taxpayer information unless authorized by the taxpayer or by law. We do take confidentiality very seriously. The right to retain representation. So taxpayers have the right to retain an authorized representative, such as a CPA or an attorney, to represent them. If you do this, be sure to complete the REV 677, which is our power of attorney and declaration of representative form, so that we can be sure we have your authorization. You have the right to challenge the department's position and be heard. So you have the right to challenge any of the department's assessments. To file an appeal, to appeal an assessment or certain decisions of the department, a taxpayer must file a petition with the Board of Appeals. For those of you who do not know, the Board of Appeals petition form is the REV 65, but the preferred method of filing is online at www.boardofappeals.state.pa.us. This method provides a confirmation number once your petition is received, so that you do have that to confirm that your appeal went through. The general time frame to file an appeal with the Board of Appeals is 60 days from the mailing date of your notice. If a taxpayer is not satisfied with the decision of the Board of Appeals, they may file an appeal with the Board of Finance and Revenue. The general time frame to file an appeal with the Board of Finance and Revenue is 60 days from the mailing date of the decision of the Board of Appeals. If you wish to appeal that decision, a taxpayer may then file with the Commonwealth Court of Pennsylvania within 30 days of the mailing date of the decision of the Board of Finance and Revenue. So we used to allow 90 days to file a petition in most cases, but effective December of 2017, it has changed to 60 days for a lot of circumstances. For specific appeal timeframes for each tax type, refer to the REV 460 and the REV 1799A. Again, all of this information is available on our website. All right, so we discussed the rights of taxpayers and their representatives. Now we're going to talk a little bit about the department's rights. So earlier we mentioned record keeping. This ties into the department's rights to audit. Keep in mind that we do not perform audits just to find out what businesses are doing wrong. It's more of a standard business practice to ensure that everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for the individual taxpayer and their rights during the process. So the department will prepare a written basis of the assessment of any additional tax determined from the audit. They will act upon requests to resolve concerns that come up during the course of an audit. They will allow taxpayers to make requests by going through the proper chain of command. And they will explain the taxpayer's rights to appeal the assessment of any additional tax from the audit. So again, if you get an audit notice, do not be alarmed. It does not mean that you did something wrong. Audits are a standard business practice of the Commonwealth. All right, so we have you here today to help you to avoid enforcement, but we do need you to know what can happen if a taxpayer does not file a return, pay the tax due, or file a timely appeal for a tax balance. The left side of the slide shows some of the more common enforcement tools. The right side are tools that we use when we receive little cooperation from taxpayers. Our goal in inviting you here today is to help you avoid all of these scenarios, but again, we're trying to prevent you from getting to this point, but we need you to know that it could happen. So let's talk through them very quickly. First, we may issue an assessment for a tax period if no return has been filed or if tax due was underreported. So we can create tax returns and apply penalties or interest for any non-filed tax years or unpaid periods. We may contact a delinquent taxpayer in an attempt to resolve the amount due. So unlike the IRS, we do contact taxpayers regarding their delinquent taxes, both in person and by phone. So we want you to be aware that the department has field agents. These agents may visit your business to conduct a compliance check. This includes checking for licenses. Again, another standard business practice, so you don't have to be alarmed when they're visiting. You can be visited for many reasons. You can be visited for non-filed returns, delinquent payments. If you are visited by an agent and you want to verify their status, you may call the appropriate district office for more information. So just ask them for their business card, call up that district office. You can verify their identity if you're questioning whether they really are a representative of the Department of Revenue. And just know, anytime that there are delinquencies, we will provide taxpayers with options for resolving their situation. So just work with us and we'll do the best that we can to find something that works for all of us. We may file a lien against a taxpayer and in some cases against the person responsible for the payment of outstanding tax. And we may disclose by publication or otherwise the taxpayer's name or business name and tax balances as a result of a lien recorded in the county prothonotary office. So liens are public knowledge. To keep off the list, it's important that you file and pay timely. We may offset federal personal income tax refund to satisfy outstanding Pennsylvania personal income tax balances, and vice versa. So the IRS can and will request a taxpayer's Pennsylvania refund if they have delinquencies on a federal level. We may deny a tax clearance certificate to a taxpayer applying for or requesting renewal of certain licenses, contracts, grants, or corporate or bulk sale clearances. So we can prevent the issuance of your liquor license, payments issued to you for grants or loans, and the ability to merge or dissolve your business. We may also deny or revoke a license issued by the department. So this includes sales tax licenses, cigarette tax licenses, etc. And like I said, hopefully we don't need to get to the items on this side of the slide, but if you fail to comply with everything else, we may garnish an individual's wages and or administratively freeze a taxpayer's bank account for lien tax liabilities owed to the Commonwealth. We may refer outstanding tax balances to a collection agency, and this process will add collection costs of up to 39% in addition to the amount due of the original tax balance. Or we may issue citations or pursue further enforcement. Again, not stuff that we like to talk to new business owners about, but it's good to know that this stuff does exist. Now you may wonder why we have a second slide on enforcement. Once again, trust funds taxes are treated a little bit differently. So failure to timely collect and report sales tax money can lead to civil penalties equal to 50% of the unpaid tax and criminal penalties for theft, embezzlement, or misappropriation of government funds. This is in addition to the standard penalty and interest. So this is an example of where the cost of non-compliance is much higher than the cost of compliance. Something unique to trust fund liabilities is that it attaches to the responsible party. So the law says the liability is enforceable against such person, his representatives, and any person receiving any part of such fund. On a practical level, this means that an owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. The liability doesn't just go away with the defunct business. So this means the department will pursue collections against the individual using all available enforcement tools, including liens. Failure to properly report and/or remit may result in fines and imprisonment under the Tax Reform Code. Again, we don't want you here. We're meeting today to help you understand your responsibilities so that you're not here. So tax evasion is a crime that hurts all Pennsylvanians because when Pennsylvanians do not pay their fair share, it decreases the revenue available to fund essential state programs and services. If you suspect tax fraud, report the activity directly to the PA Department of Revenue, including as much detail as possible. So you can use the contact information listed on the slide, or to be honest, if you just go to our website, type fraud in the search box, there will be a link that pops up that says report suspected tax fraud activity, and you'll just follow the prompts and submit the information. All right, and after listening to the presentation today, if you find yourself thinking you may have a tax requirement that you were not aware of, we do have a voluntary disclosure program, often referred to as VDP. The program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. The department's liaison officer will work to make sure that all of the taxpayers' filing and payment requirements have been fulfilled. There are incentives for coming forward. So in return for their voluntary disclosure, filing of their tax returns and clearing their debts, taxpayers are only responsible for the payment of tax and interest. So all penalties for the taxes administered by the PA Department of Revenue will be waived when the requirements of the voluntary disclosure agreement have been completed. It is important to know that the program is only available to those taxpayers who are not registered with the department and for which no investigation or collection activities have begun. I believe there's a handout on voluntary disclosure in the PDFs as well. And of course, we want you to know that we have several social media platforms. We generally use these outlets as a means to push information to taxpayers as well. So we'll post tax law changes, fast facts, any events that are going on, and anything new with Pennsylvania taxes or the Department of Revenue. We do try to keep it unique per channel, try to gauge who our audience is, but just know that there is good information out there, so we recommend that you follow us. Also, we are here as representatives of the Commonwealth, and with that being said, we have an obligation to push the 2020 census. Our communities and families benefit when you participate in the U.S. Census. The population count taken during the census determines the federal support that Pennsylvanians receive for the next 10 years for education, healthcare, housing, food assistance, roads, and much more. So when you get your invitation to take the census, you can respond online, by mail, or by phone. As a Pennsylvania government stakeholder and a partner, we ask that you be a good neighbor and spread the word. And whether you're thinking about starting your own business, expanding your existing company, or considering a move to the Keystone State, the Business One Stop Shop website, which is www.business.pa.gov, will provide useful information to help you work smart and live happy in Pennsylvania. So if you have any general questions related to starting or expanding your business, local earned income tax, local business assistance, state permits, or you need information regarding unemployment compensation, workers' compensation, or new hire reporting, the Business One Stop Shop is where you want to be. So we have provided a PDF attachment with all the information on this site as well. It is a good starting point for any business owner. We're here as representatives of the Department of Revenue. We can only talk to you about your tax obligations that affect the Department of Revenue. The Business One Stop Shop is a single place created for business owners to get information rather than needing to know who to contact for what. So all of the impacted Commonwealth agencies for new business owners have come together to create this website so that you have a single point of contact. Again, really great place for you to be. It's all right there. And I'm going to hand it back over to Will. Are you there, Will?
Yep, I'm here. I'm sorry, I had to unmute myself.
It's all right.
We want to thank everyone for coming today. We know how busy you are as business owners, and we appreciate the opportunity to talk to you and help lay the stage for you to be successful with your business. If you have any questions, this is the part of the program where we can help answer those questions. So, Jamie, I'll let you lead it from here.
Okay, perfect. Yeah, we do have some questions from the audience. To everybody else who maybe was just looking for a broad overview, if you want to sign off now, that is fine because we are at the 1 hour mark. I will ask that you complete the survey for us. This is really important as we are able to provide no-cost programming to you because of our funding from the Small Business Administration. I'm going to pop that link into the chat right now. So we'd really appreciate you all filling that out. There we go. And I know that Alicia mentioned the attachments. Those you would have received yesterday. So if that doesn't sound familiar to you, check your spam, and it might be in your spam. There were about, I think, maybe 7 attachments that we sent out from the Department of Revenue. All right, so our questions. There are about, I think we have about 10. The first one is, if we have a question about if a service is subject to sales tax, how can we find that out from the Department of Revenue?
Okay, so Alicia covered several options to help with that. One of the resources you can use is calling our customer service center. Our agents are trained and for the most part are able to answer any question you ask them. In addition to that, to schedule a call is another way to get a question answered. The other one is to kind of review our Q&As already compiled in the online customer service center that Alicia shows you. And of course, then there's the Rev 717. All of those together usually account for most questions you should have.
Okay, perfect. So yeah, so speaking with a rep and all the resources that Alicia mentioned. And then somebody asked if we can send out the PDFs to attendees. If you're comfortable with sending it to me, then I can send that to the attendees, so that's up to you.
Which PDF are we talking about?
Of the presentation specifically. I'm not sure if
okay.
it's publicly available.
Yeah, that's okay. You can send the PDF of the presentation
right.
out.
We'll do that. Great. Okay. Next question. A consulting business is looking for clarification on what is taxable in terms of the services provided. If this person's only providing advice or verbal feedback, is that taxable?
No, consulting generally is not. But I will give this warning about the word consulting. We have found in the past that consulting sometimes can take in taxable services like employment agency services, certain kinds of computer services and things like that. So consulting where you're just giving verbiage is not going to be a taxable kind of service. If it goes beyond that, then we'd have to look at the circumstances.
Okay, and that's a good question to call the hotline or make it a
yes.
call.
Yes.
Okay, great, thank you. All right. After registering as a new business, all activity was put on hold for about 3 to 5 months because of the coronavirus. So the business has essentially not been operational since registering. What would that new business have to file?
So if I were that business, I would file my sales tax returns as they were due. And for those periods of time where there was no activity, you just file 0 returns. Just fill out on the e-tides, when you're filing an e-tides and filling out, going through the different line items, just put zeros in and file, but keep the filing active so you don't show up as a non-filer.
Okay, great. Federal government requires you to pay estimated taxes when you make 400 to 600. I'm guessing that's the minimum. Does that also apply to state taxes?
Yes, but the threshold's different, and I don't know what it is off the top of my head, but we do have required estimated payment provisions for personal income tax. The exact thresholds would be available on our webpage.
Okay. Since the city of Philadelphia has a sales tax of 8%, does this mean we have to pay the additional 2% to Philadelphia if we make a purchase, like in your example?
That's a good question. So Philadelphia does not have an 8% sales tax rate. The way it works is the state has 6% and Philly has 2%. All total, it's 8%, but only 2% applies to Philadelphia. If I have a business in Philadelphia and I order products from anywhere else and I have them bring them into Philadelphia and they're taxable, then yes, I have to pay the 2% Philadelphia use tax as well as the 6% state use tax.
Do different jurisdictions have tax reciprocity? For example, New Jersey and Pennsylvania income tax.
Yes, there's actually a chart on our webpage called a reciprocity chart.
Oh, great.
I think the number of it is Rev 227. I think that's the number. But anyways, the way it generally works is if a state recognizes our tax, we'll recognize their tax. However, in some situations, the tax rates aren't exactly the same. So for instance, if you buy something in Maryland and you pay tax in Maryland, you bring it into Pennsylvania. The last time I checked, Maryland's tax rate was 5%. I don't know if that's still the case, but assuming their rate is still 5%, you would still owe additional 1% use tax to Pennsylvania when you brought the item into the state.
Okay, great. So this is similar to a previous question asked. Does online coaching qualify as a taxable service?
No.
This is particularly about personal finances.
No, online coaching does not. Yeah, online coaching would not qualify as a taxable service. What was the second part of that?
Just the more specifics of this situation.
Okay.
Is personal finance coaching to get people out of debt. So I think you answered. Okay, great.
Now, so I'm just thinking about that. The one thing that popped in my mind as you were talking about it is credit reporting services are subject to tax. So, I mean, I don't know if that business may flow into something like that, but be aware
you're providing something.
Yeah.
Okay.
There's more information available on our webpage. If you think you verge on you're on the verge of providing credit reporting services of some kind, then check our webpage and use that online customer service center to research that topic.
Yeah, better be safe than sorry and get a confirmed answer. If you call and speak to someone and get advice about your particular situation, do you get like a reference number or something that later you can say, hey, this is what I was told, I did my due diligence. If later something comes back to get me, I can refer to that conversation?
Not really. I mean,
Okay.
we record our conversations, but there's no issuance of numbers.
Got it.
I will say this, though. If you rely on something that's been placed on our website and you rely on it in good faith and it turns out to be incorrect, generally you can get relief from that kind of situation.
Okay, so keep notes then. That's what I would say. When you're having this conversation, keep really good notes and say, this is the date, this is who I spoke to, this is what they told me. Might help increase your chances in case you're relying on that information.
Yeah, and Jamie, I'm sorry. Every agent does have an agent number. So whereas we don't have a reference number, they can ask for the agent number. And then if they have the date and time, we're able to pull that call.
Okay, no, that's great. That's great. Okay, does the Pennsylvania, interesting. Does the Pennsylvania Department of Revenue offer voluntary audits to make sure you're in compliance?
Not at this point.
Okay.
I don't have anything else to say about that.
Okay. That's fine.
I mean, you can ask to be audited. I don't know what would come of it, but I mean, we do have a Bureau of Audits. But
then it's a real audit, yeah.
Yeah, it's a real audit, but we don't have that kind of arrangement right now.
Okay. The shutdown hit as this business was starting and they have no sales subject to sales tax. When do I have to file an initial sales tax form? Now or when there is a sale?
So if you never make taxable sales, there's no need for you to have a sales tax license, period. So there is no filing requirement.
Until the sales start to come back.
Well, if you're, okay, so let me explain it to you like this. If you don't sell taxable products, there's no need to have a sales tax license. You're only required to have a sales tax license if you make the sale of taxable goods or services. Now, for periods where you have no business activity, we'll get back to what we said before about you file a non-return with the department. So you don't show up as a non-filer in our records.
Okay, so I think in this situation, it sounds like they do have things that would be subject to the tax. They just didn't have it in that time frame. So
Yeah.
the answer is like before, is to still file, but just with zeros.
Right.
Okay. I'm opening a for-profit preschool. I've registered my business with the city, state, federal. Do I still need a commercial activity license?
Pennsylvania, or the Department of Revenue, I don't believe deals in commercial activity licenses.
Yeah, I think that question would be a good question for our consultants, because that's less of a tax thing and more of like getting legal. So I would say, if you're to the person who asked that, if you're not already a client of the SBDC, you can sign up and ask to speak with a consultant, or just talk to your consultant about that, because that's a little outside the scope. All right, so I answered the questions in the Q&A, and now I'm going to go to the chat. All right. If you are a new business just getting started, is there a penalty if you miss the first few quarters of estimated income tax?
Yeah, there is an underpayment penalty for estimated income tax if you fail to meet the deadline and all that. So again, I would refer you to our webpage for the exact details, but my answer to your question is yes, such a penalty does exist.
Okay. If I use a third party to file my use sales tax, would I be liable or the third party?
Well, I'm not sure what situation we're talking about. So if I'm a bed and breakfast and I'm using Airbnb, Airbnb is required under law to file the tax returns. However, you're still liable to maintain the books and records.
I think they mean if they use an accountant for their business. And I think the answer is that they would be liable as a business, but then their accountants, they could then hold their accountant liable for any errors.
Right, which is outside of what the Department of Revenue does. The conflicts between the parties is conflicts between the parties. You remain liable for your business activities and the related tax liabilities that arise from it.
Yeah. Okay. One of our consultants mentioned that some of her clients have had challenges registering their tax accounts online. System is just taking them to the beginning of the application. What other options are there if the online system isn't working when looking to apply for a tax account number?
Okay, so I've had the opportunity in the last couple of weeks, because we've kind of restructured a little bit, to participate in the schedule a call. So some of those calls have been rolling to me, and that's actually a common question. So this is how I handle it. When I'm talking to someone who's having a difficult time with e-tides, I'll take their name, their phone number, their business ID, their revenue ID that they're issued, and I forward that information to our e-tide staff, and they will call them and work out the problem with them. Because fixing those kind of problems can get very technical, and not all revenue employees possess the technical knowledge to fix those things.
Okay. Someone had a question about lottery scratch-off tickets and paying the
Can't help you there.
down.
We're beyond our scope.
Right. Okay, no problem. And someone else said to try using a different browser if you're having issues with the Department of Revenue site. They had the same issue and the new browser fixed it. Okay.
The problems, they run the gamut. You know, it could be browser, it could be just anything. And so, but I have found that our e-tide staff is able to resolve all issues once it's brought to their attention. So I'm comfortable with it, the way we've been working it through our phone conversations, and that's why I plan on continuing to do it, of putting you into the hands of our e-tide staff to resolve those issues.
And Jamie, I did want to mention, when I was talking, Google Chrome seems to work a lot better than Internet Explorer for a lot of our stuff. So I know that if you go to look at our tax blog, a lot of times you can't see it unless you're in Chrome. So if they are having issues, I definitely think that checking the browser could be a good first step, and then doing what Will said to follow.
Yeah, that's the case with a lot of websites, I think.
But it's not an uncommon problem, so you don't have to feel like, gee, there must be something wrong with me, or it's not that. It can be very fickle to get started, and we understand that, and that's why we've put these resources in place to help you navigate through those difficulties.
Someone is asking if there's chat support or advisory service for tax-related queries. I think that just goes back to the phone number. I don't think there's like a chat feature on the website that you went over, right?
Alicia, do we have chat yet?
Not at this time.
We do have the tax blog. I'm trying to think. I think that's the extent of it.
Yeah, right now
the phone number seems like a great option.
Yeah, or submitting a question to the department at this time.
Yeah, let me just say about that. Having worked in CEC, it's kind of a new area for me, but this is what I've noticed. Nothing gets posted that isn't vetted. I mean, we take getting it right very seriously, and we oftentimes involve the department lawyers in working at our response so people get the right information. So don't be afraid to come to us, and maybe it'll take us a couple of days to get a more technical question exactly right, but we work to get it right.
Makes sense. Someone asked, I did not make any income yet and have not filed my estimated taxes. What is the penalty for not filing?
Well, if you don't have any income yet, it's a moot point because there's no tax. If there's no income, there's no tax. Track, I wish I had the chart in front of me. I'm thinking, Alicia, do you know this one? What's the threshold where you have to start paying estimated income tax?
I think I just pulled it up a little bit ago. I think it's under 8,000, but I'm not sure.
I think it is 8,000. That if your tax liability is going to exceed 8,000, and I think that's if it's off of non-wage income, then you have to make estimated payments.
Okay. But your advice is still that even if that's the case, filing just with the zeros is better for you overall, right?
Well, yeah. I mean, even if you take a loss, you're still required to file a PA 40. I mean, if you have a business, you still have to file the return.
Okay. So someone else.
To answer your question, better safe than sorry. Absolutely.
Right. Yeah, exactly. Someone else is asking, so that they were unaware that they should have filed during the COVID issue and that they're going to get penalized. So someone's concerned that they didn't have this information previously, that they needed to file.
I don't know exactly what mechanics the department has set up, but I know that the department is trying to be lenient with businesses during this time period, being aware that everybody's gotten taken off guard and mistakes occur, and we're not really interested in penalizing people for COVID. So I would say if you do get a bill for penalty, I would file an appeal with the Board of Appeals and ask for relief. Say this was, that's what I would do. And I'd also pay attention to department messaging about any penalties that will be accrued during COVID to see how they're to be treated. But my answer to you is if, in all of the things being equal, anytime you feel like you're paying a penalty you don't feel you should have to pay, file an appeal with the Board of Appeals. Like Alicia said, you can do it online.
Okay, no, that's great. All right, so just going back to our previous question, just wanting some more specificity, in what cases would sales tax be applied to services?
So I think there are 10 or 11 enumerated services. They include building, cleaning, and maintenance. They include telecommunications, credit reporting and debt collection. They include, this is like a test.
You're doing great.
Right. Lawn care. Lawn care is a big one. As a matter of fact, and there's one called help supply. Help supply is another service that is taxable. Secretarial services, secretarial and editing services are taxable. Those are the key ones that I can speak to immediately. Again, if you would go into our online customer service center and type in taxable services, you would get the list.
Okay, that's great. Yes, it seems like.
The other thing I want to point out is, so Repair services are taxable too. So for instance, if I buy a wooden table and it gets scratched and I take it back to have it refinished and I'm charged for it, okay, the repair to that table is taxable because the table's taxable. Repairs to cars are taxable because the cars are taxable. So when I buy something that's taxable, any related service to that item is also taxable.
So it sounds like there has to be something physical, like a physical interaction.
Most of the time. Most of
the
the time, yeah.
Okay, so that's good. Yeah, so definitely just double check on the website, but it seems like information exchange is usually not, from what I'm gathering, and kind of when something physical happens.
Well, I want to be careful with that
Okay.
because the downloading of canned software is subject to tax. The downloading of digital goods is subject to tax. So we have to be,
No,
I
that
want to
makes
be,
sense.
yeah, I want to be careful there when you say data exchange. That
Right.
I kind of hedge on that a little bit, but real consulting is not taxable.
Right. When it's just kind of like words that you are saying.
Right. But
right?
there's a practice out in the business community that calls, for instance, one time I dealt with a taxpayer who told me he was in consulting. And we had this big discussion, and he kept telling me he was providing a non-taxable service. But when I asked him what he did, he said he assembled computer parts, he installed software, and I had to tell him, I said, that's not consulting. That's
Right, because it's a little bit more,
you are providing a taxable service to hardware, taxable tangible personal property. So that's what I mean. People use that word consulting loosely. So I always ask the second question, what do you mean by that? What is it exactly that you do? If you're helping, if you could say you're a consultant, but if you're helping someone find work and placing them in a job, that's a taxable service. So that word consulting can get a little cloudy.
Right. Okay. Somebody else asked how they can review this meeting. We will be putting this on YouTube. We have almost all of our webinars that we've done since the start of COVID quarantine. We have that on our YouTube channel. And the same person asked, will we offer more meetings like this for new business owners? We do have a really robust calendar, so I would invite you to look at that. And if there are certain topics that you're interested in, please mention that in the survey. It's just a 4-question survey, and the last question is kind of asking what other topics you'd like to hear about. So we always welcome that feedback, but we have a ton coming up on our calendar. It looks like we have one more question. If there are any more, I would say put them in the Q&A now, otherwise we'll wrap up, and I'll get to this last one now. This business canceled their wholesale license that they had from February 2020 to May 2020 because I needed a sales tax license. However, I haven't made any sales, and this person is still in the process of opening the business. Am I still liable to file taxes for the wholesale license?
Well, actually, the wholesale license doesn't require the filing of any taxes. The wholesale license is used to make non-taxable goods as part of the exemption certificate that we talked about earlier. So a wholesaler license is not a license to collect sales tax.
On its own, okay.
When you get a wholesale number, you basically say that you make absolutely no retail sales at all. That's when you get a wholesale number. The minute you go into retail sales is when you have to shift to a sales tax license, which requires the issuance of a license that you have to put in your place of business to show the general public you have authority to collect tax on behalf of the state. And then, of course, that same number then is used to timely remit and file that money with the state. If you are now planning on making retail sales and you're holding yourself out and advertising the sale of taxable goods or services to the public, you should have a license and you should be filing returns even if they're non-returns.
Okay, great. I think that may be it for all the questions, which is great because we're at an hour and a half, and I think that's what we said we would be at for today. So thank you everyone for joining us. I will send a follow-up to all attendees. That'll include a PDF of the PowerPoint and the recording and the survey link, because we really do need you to do that. Thank you for joining us today. Please check out our research. Oh, someone asked about a webinar on hiring. We do actually have, we have a webinar coming up on HR manuals. So that could be a good one for you to check out for the person who just wrote that in. Anyway, so thank you so much to everyone for joining us. Thank you so much, William and Alicia. We really appreciate this. We've been anticipating this webinar for many months, so it was nice to do it, and it worked